Friday was another distribution session for the overall market. And I've been telling everybody, especially, I think I've been reviewing that in every weekend video lesson. I don't know. I make one every day for everybody, but I've been telling members lately that this last leg of this recent uptrend off the April lows, I have negative divergences everywhere. And I'm going to show you my trusted tickets indicator and what it looks like on an hourly time frame. But as we can kind of do this tightrope walk higher, the distribution days are piling up. 1, 2, 3, 4 volume bars, clearly above the moving average, 50-day volume moving average, compared to 0 green bars above that level. So we're starting to see some problems with distribution days piling up in the market. QQQ had one, and the IWM, it hasn't failed yet. Nothing's terrible yet whatsoever. And remember, my only concern about this market is short term. Intermediate to long term, we're fine, we're aligned. Plenty of my momentum and technical oscillators and indicators are completely bullish on a weekly to daily time frame. But short term, there are some issues. The distribution days is, of course, a major one. I would have liked to have seen the IWM actually hold this breakout level. We're back in the consolidation pattern. The percentage of stocks above their 20-day simple moving average was higher back here in the QQQ versus here in the QQQ. The stocks above their 50-day simple moving average has completely flatlined while the market's moved higher. These are negative divergences. And on the same note, the put call ratio did spike to 0.78 today, but the 5-day moving average is on stockcharts.com. So the put call I'm giving you is from Market Surge, Investors Business Daily, that's 0.78. I believe it's 0.61 currently on stockcharts.com. And the 5-day simple moving average is 0.56. Very, very, very complacent options market. And if you would like to look for a short-term low, you need to see that at least hit 1. And we're nowhere near there. We're near there on the IBD, 1.78, but nothing's really serious there. And then another indication that the market might want to pull is that the VIX is above 20. But like I said, despite all of that, still have a lot of stocks working. I am personally long QUBT. The white arrow is actually where we went long. And so it currently is up 25% from there. But at the same time, there's stocks that are running stops like RKLB. After getting along this name, we were doing very well, and we had a very nice 22% gain. That's now rolling over below its 21 EMA, and that's an end-of-day 50% sell signal for only a 5% gain. And then, of course, we had TGLS fail today. And, of course, I buy this little breakout, squats back, so tight with my stops. So, guys, if something doesn't work immediately in this tape, I am so tight with my stops, and I am willing to have something like PLTR happen to me where I get long, get stopped out, watch it work without me. No big deal, really, because it's in my long-term account. It's a forever hold. I'm good. Yes, the swing side got me, but I understand why it got me. And I've always said buying stocks extended from the 200 SMA and 50 SMA are always problematic, and that's basically all we have. So I welcome a market pullback. But despite that, there's still a lot of strength out there. GLD, breakout to new highs. Yes, I own gold bullion, and I do own GLD in some long-term portfolios. So I do have a position there. And on the swing side, there's a lot of good-looking names in this space. And here's one that hasn't broke out yet. HMY is consolidating. I saw a B breaking out of a cup with handle. NEM is the monster breaking out of a cup with handle. I mean, there's just a lot of good-looking stocks in this area. And if it isn't there, oil and gas names. So this is commodities, commodities, commodities. That's the theme of my scans lately. Commodities, commodities, commodities. And then even in the energy sector, this quadruple U right off the 200 SMA, low price stock. But look at all these big, tall volume bars with the pocket pivot point signals, strong balance of power. I just seeing a lot of this in the commodity related stocks out there. So that's where the focus is. That's the hot theme. But another hot theme, because of CoreWeave, are IPOs. And I recently got a very good long signal in IPO at SAIL, AI related cybersecurity name, crushed on the top and bottom line, raised guidance. Now you got a little tight flag forming right after that earnings gap up. Kind of thinking it's kind of like a CRDO CRDO did do a little dip, but I kind of see a tight flag there. So SAIL, at first, whenever it gapped up, I was looking for an inside hammer candle. I got that yesterday. The buy stop goes above 23.53 at 23.54. Well, I have another inside hammer candle today on lower volume, and it's hard to see, but balance of power is like one tick higher than the day before. So for 3 straight days, the BOP has been green and rising, and today's inside hammer candle on a down day comes on lower volume. So I'm adjusting my buy stop from 23.54 to 23.31, and I got to risk at least a 1 ATR. And what I think I'm going to do on this one in real time with everybody, we'll look here at F4. I believe I have the 8 EMA. I do, the white line. I think initially the white line, it was going to be the blue line, but the blue line is now cut up to this low. Because the market's so volatile, I want to give it down to the white line. And right now, that's 2083. So if I adjust that stop down, I'm initially giving it a stop to 2083 on the position. But I really like this one. I really like SAIL. I just don't like where the market is currently. And then there's another one besides SAIL. Sail and circle, circle to sail, circle to sail, sail to circle. Recently tried eToro also. You can see the white arrow, but they did a surprise ER unbelievably after breaking out of the IPO base. Nothing you can do there. Wasn't announced, wasn't known. Nothing you can do. All I can do is now take that information and moving forward, no matter how much growth I love in a new IPO base, with sales and earnings over 100%, with Kathy Wood buying, with the lead underwriters being JP Morgan, Goldman Sachs, Bank of America, Wells Fargo, blah, 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 I still can't go long unless I see an earnings report recently with an upcoming Zinner report date finalized and or the earnings announcement already out of the way. So somehow I need to know that earnings aren't coming up right now or are already out of the way, or we have a finite date to get long IPO stock. So eToro, whoopsie daisy. My final stop though in this position is this low, but I've been piecemealing out of it. I only have a tiny position. Half the stops are below this low. The final stop is here. I am red on the trade. And I bring that up because SAIL, we had earnings. Earnings are out of the way. SAIL can't surprise me with the earnings. Can it surprise me with an offering? Yeah, let's hope it doesn't do that. But now that takes me to Circle. Circle, I was hoping was going to pull back more. Circle, I was hoping was going to give me an inside hammer candle to get long above the high of the day. Unfortunately, it didn't. It looks like it already wants to break out of its IPO base. I feel like I'm going to get suckered in if I go up here. So I'm going to do two things. I'm going to do a buy stop above today's high of the day, and I'm going to do a buy stop above this high of the day. However, I'm going to look at Circle. I don't think Circle's foreign. eToro was foreign. I forgot to mention, that's the biggest caveat behind all this, especially if it's foreign. I got to know when that earnings date is. If Circle isn't foreign, if the earnings date isn't known, I'm going to go ahead and hold off. But if I look up Circle, I'm making this video before I'm doing any kind of research, so everybody can front run me on these trades. If I see that earnings are coming up in 2 months, great, I know that. If I see that Circle just had earnings and that there's a future date or time frame somewhat around the corner announced, great. And if it's United States of America, great. Do all that, I'm taking this trade. But if Circle has an unknown earnings announcement, if Circle, which I know it's not, happens to be foreign, not taking the trade. So what I'm going to do is I'm going to have a stop below this low right here initially on this trade. If it works, awesome. If it doesn't, we'll cut our losses. But basically, I continue to be fully invested. Whenever I do raise cash, I take whatever cash is raised and I put it into the next trade. So SAIL is going to probably get 60% of my available cash. Circle is going to get the other 40%. Now I'm going to end this video lesson off with this chart. This is the QQQ. This is the daily. The daily, all we care, forget about all of this down here. This is the only thing I want you to look at, the tickets indicator. The daily is fine. You can see the daily's uptrending. The 50 wants to cross the 200 SMA. We're still above the 21 EMA. Everything's good, right? Now I want you to look at the hourly, and I'm going to change this time frame to 90 days. I want you to look at this. So remember those negative divergences I was talking about? This is an hourly chart, and I want you to notice as it stair steps higher, once it gets above the zero line, it's above the 50 SMA. This is the 200 SMA. This is the 500 EMA. Ignore that. You get back above the 50 SMA, we're looking good. We dip below it, we're still well above that zero line. Everything starts to look good until right here. Then the tickets indicator gets weak, stocks stay weak, but this is where it really gets weird. We do that weird rally that we've seen the last 2+ weeks, right? Look at what the tickets indicator has done. Absolutely nothing. It is completely flatlined. So all those negative divergences I've been telling you about is summed up beautifully in this tickets indicator. So one of our members, he created this indicator. I like to use it whenever we have a weird market. Now, just to let you know, I've never seen a tape do this. I've never for 2.5 weeks had something slowly moving higher, especially on the indices, while this indicator doesn't either march along or continue to stair step higher. I've never seen it drift lower like this, get below the zero line, stay below the zero line while we do this slow stair step. Now it appears we're finally starting to break lower on this indicator. Will price go with it? I don't know, but I do know this is weird. This has been weird. That's called hard and heavy negative divergence. So if this market completely rolls over and we want to go, I don't know, somewhere around 450, get back into this consolidation area, I won't be surprised. All right, everybody, thank you for watching the video lesson. I'll see you back here next weekend.